Hola, yo soy Nacho y Mary y te doy la bienvenida a nuestro podcast Startup Mentoring and Venturing. En este espacio virtual nos juntamos todos los viernes en vivo a las 7 de la mañana vía Instagram Live y desde Nueva York sostengo NachoTalks con power players de la industria del emprendimiento y del venturing para que podamos tomar nota de buenos consejos para emprender con éxito, para identificar e invertir en las startups más exitosas de Hispanoamérica y para identificar a los mejores angel investors y gestores de fondos de venture capital enfocados en la región. Te invito a escuchar y a aprender de la historia de nuestro invitado de hoy. Te doy las gracias por formar parte de nuestra comunidad y te animo a que compartas este podcast con tus amigos emprendedores, mentores e inversionistas. Y ahora, let's talk con nuestro invitado de hoy. Okay, Rajiv, it's a pleasure to have you in my podcast today. Today is Friday, September 13, 2024, and I'm super glad that you accepted my invitation to share your experience with me and our audience. How are you?
I'm awesome, and thank you so much for having me. I really appreciate this opportunity.
Yeah, absolutely. We're going to have a great conversation. It's going to be a very informal but very useful conversation for the audience of this podcast. As I explained to you the day that we met and in the different conversations that we have had in the past couple of months, the purpose of this podcast, Rajiv, is to give the people that I invite to this podcast the opportunity to share their knowledge. And basically what we're trying to do is try to solve two problems that can improve a lot in LATAM, which is give the entrepreneurs access to knowledge. And the second thing that we're trying to solve is give the LATAM entrepreneurs access to capital. Because if we give them access to knowledge and capital, the opportunities and the chances of them being successful improve substantially. At the same time, I also give this podcast gives the opportunity to fund managers from the US and from LATAM the opportunity to identify great entrepreneurs that are building great companies that are solving the problems of the middle class, lower class, and the corporate sector, which is something very interesting because most of the fund managers like to reduce the risk of their portfolio. So investing in startups that are doing business in multiple jurisdictions is very relevant. And the other purpose of this podcast is to give the managers of single family offices of LATAM, in particular, the opportunity to learn about this asset class, which is something, an asset class that is well understood by US family offices, but that's not the case in LATAM. So explaining to LATAM family offices why it is so important to invest in the asset class makes a lot of sense, because if you realize what LATAM entrepreneurs are doing, they're basically focusing on dealing with the pain points of the middle class and lower classes, which means giving that sector of the population access to work and to a better quality of life. And that brings a stability to the region. And that's something convenient for the entrepreneurs, for the investors, for the family enterprises, the multinationals, and the investors. And that's why, I have reserved a portion of my time on a weekly basis to interview amazing people like you. For my audience, I have a very good friend today as my guest speaker in this podcast. His name is Rajiv Kapoor. He's based in New York. He's the founding partner of Chai Ventures, a VC fund that invests in very successful and bright female entrepreneurs. They are building great companies that are offering products and services in industries with the capacity to scale substantially their business with impact. The fact that he's supporting female entrepreneurs is something that really caught my attention. And that's why I decided to invite Rajiv to this podcast, because as I mentioned to you, Rajiv, there are amazing female entrepreneurs in LATAM that are building amazing companies. So the idea of adding some of these startups to the portfolio of Chai Ventures, is something that is really appealing to me, and I'm sure it's something that will be very interesting for the females that listen to this podcast when they have the opportunity. The background of Rajiv is amazing. He started his professional career as a consultant, working with Deloitte. Eventually, he became an entrepreneur. He launched a couple of businesses. Eventually, he became an investor and started to make direct investments in startups. And eventually, that to the point that he made the decision in 2019 to launch a VC fund that is called Chai Ventures, based in New York. And as I mentioned before, what the investment thesis of this fund is to invest in early stage startups that are being run and managed by bright female entrepreneurs. So with that brief introduction of you, Rajiv, like I explained earlier to you, what I would love you to do is to share a little bit of your life, professional experience, consultant experience, entrepreneurial experience, and investor experience, viewing this conversation in a timeline. And I would love to start asking you, how was the experience growing at home? One of the interesting things that I would love to learn, and my audience usually loves to learn, is whether you grew up in a home where your parents were entrepreneurs or investor, and if this venture startup topic or business topic was something that was discussed in lunch gatherings or Sunday gatherings when you met as a family.
Awesome. Yeah, thank you very much. If I think about how I grew up, it's a couple things I'd point out. One is that we did have a really entrepreneurial family. My dad was an entrepreneur. He came from India originally to the US for opportunity, and our family was in real estate, and he built a business around import-export. So I was really proud of him for that. And I saw that he enjoyed the work that he was doing. So for him, work was not like work. And that was probably one of the best lessons. And I also got the bug. I was like, I want to be an entrepreneur. He would invest. He didn't have like a Wall Street career, but he would also invest for himself, buying and selling stocks or whatever he thought was an opportunity. So I saw that too. So I saw a little bit of investing, a little bit of entrepreneurship. My mom, for the most part, took care of the family. She also was a pretty strong woman, so I saw that as well. And I think that manifested, like if you look at my sister, she had a full career as a firefighter. And I think it's that ethos that came from my mom that led to that. And then my parents, the last thing I'll mention is just value. They just let us kind of do our thing. So it was not like a helicopter parenting. It was like making our own mistakes, learning, and so the experimentation kind of started pretty young, of like trying to try things out, like try entrepreneurship, try to buy and sell. And I was reading books pretty young, like Warren Buffett, George Soros, and I was appreciating their strategies and what they had done. And so that was just a little bit, I didn't know if I would use that later in life, but that was in my head already at that time.
That's interesting. One of the things that you just shared, which I would love to maybe understand a little bit better, is the fact that your family decided to migrate from India. As you are aware, I'm Venezuelan. We've gone through very difficult times in Venezuela, and a third of the population of Venezuela have made the decision to migrate. I am a good example of that diaspora. Okay, which were the reasons that motivated your parents to actually migrate from India and come to the U.S.? Was it something related to the conditions of the country, or the opportunities that they saw were available here in the U.S., and that's why they decided to migrate and come to the U.S.?
Yeah, I guess my dad came from India. My mom came from Hungary, of all places. And my dad, I would say, came for opportunity. Like he just wanted to, make it. And he kind of had to work his way up. He was doing pretty simple jobs in the beginning when he got here. And my mom, it was a different situation. It was like not a good time in Hungary in 1956, around 1956. Where the Russians kind of left the country for a moment, and then they came back to reassert. And a lot of people kind of left at that time for a better life. I mean, people were getting killed. It was not a good time. And so my mom came for a better life with her parents. So basically, that was my family. It was like my mom and my dad, and then my sister, and then my two grandparents on the Hungarian side. So, but like I'll tell you this, they both appreciated America and just pretty much wanted to be American. So both of my parents were just like, oh, we're American now. So that's how I was brought up. And then I will just say, if I may speak forward a bit, eventually I did end up going a couple of years out of college. I did move back to Hungary because communism ended, and it was very exciting times. And then I met a woman there, my wife, she's Hungarian. So I kind of doubled down on Hungary to give a little taste of future conversation.
Very interesting. Did they meet here in the US or abroad?
They met here. They met in New York. They met in New York City, which, classic New York story, I guess.
Amazing. I bet that the type of dinner and lunch experiences that you have had the opportunity to enjoy in life, considering that your dad is from India and your mom is from Hungary, has been very interesting because the menus, I bet, are completely different.
Yes, completely different. My wife, I introduced her to Indian food. She fell in love with it right away, and she likes the Indian culture, so that helps. And yeah, we enjoy both. And funny enough, there's a grilled chicken dish that I call Indian Hungarian because it's got paprika and it's got all the Indian spices. So
Delicious.
brings the worlds together.
We have to plan a lunch meeting then at some point in time in your preferred Indian restaurant here in Manhattan.
Great.
Were you born here in the U.S. or you came to the U.S., as a child?
Yeah, I was born here. I was born in New York City, and then my parents moved out to the suburbs. So we've been in the suburbs since then, pretty much.
Nice. Okay. So you grew up at home. Your parents were entrepreneurs. They came to America, seeking opportunities and becoming U.S. citizens and enjoying everything that has to offer this amazing country. And you eventually went to school. What did you study?
So I went to school in Tennessee, and I studied. It's funny because I knew I wanted to do entrepreneurship, but there was no class for that. So at least as far as I knew. So I picked a school that was a little bit adventurous. It was like 16, 18-hour drive down there in Tennessee, and I really enjoyed it. And I studied economics. So that was kind of the closest I could find to business. And I still appreciate thinking about economics even to this day and trying to figure out what's happening in the world with markets and all that. So I appreciate that.
When I think back in time and I try to remember which were my best professors and mentors in life, I also remember the name of Ross Olive, which is a professor that I had at my MBA studies when I came to the US to study 20-something years ago. And he was a professor that invited me to seriously consider launching a law firm business in Venezuela when I returned to Venezuela. So I'm wondering whether any of your professors had influence in your decisions to eventually, first of all, to become a consultant at Deloitte, but eventually if any of those professors invited you to seriously consider the idea of becoming an entrepreneur and launching a business.
Yeah. Well, sorry to say I wasn't that engaging with my professors at that time. I was a late bloomer. It took me a little while to get there. So, I remember I was going to classes, enjoying school, and also I had businesses at that time. At that time they were very small, and I wouldn't say money-making businesses, but I was running around trying to make things work in parallel to school. And so, I would stumble if I was working on a certain type of idea, I would stumble into people that could be like advisors on that idea, usually outside of school, more in like private industry. So there have been incredible mentors all along the way. It took me a little longer than college to get that going.
That's normally the case. We end up learning that it's important to get close to mentors later in life. It's a fact. That's normally the case. And how did you end up working with Deloitte, and what type of work did you do at Deloitte?
Yeah, I mean, I would just say it this way, like I kind of had three jobs, one after another, after college. And I was trying to find my place back in New York, trying to find my place in the workplace. Things were very different than college. Deloitte was one of the three jobs, and it felt the jobs were pretty structured. They're all large companies, right? And they're pretty structured. And I think my best learning was like I'd prefer a small company entrepreneurship. And so, though I appreciate Deloitte and the experience, I was working on a really cool finance project. The client was Citi. And I got to experience some really amazing consultants, and same with the other two jobs I got to learn. But in the end, I was like, okay, and that's around the time where I said, okay, Hungary, communism just ended in Hungary. They're going to rebuild everything, and there's so much excitement. And I have this base. I've traveled there. I've been there. I get it. And let me just go there and have some fun and work on my entrepreneurship. And so I just left without a concrete offer or anything. I just left for Hungary, and I was like, I don't know how long I'm going to go. It ended up being, like I said, I met my wife, and it ended up being, we had a really good life there for 14 years and three daughters born there, but I didn't expect that in the beginning.
Interesting. So you moved to Hungary for 14 years, and you took advantage of normally what happens in any communist country when the communists leave power, which is the opportunities that are related to the rebuilding of a country, because communists, what they know how to do is to destroy freaking everything. So when they leave power, you have to rebuild everything. Can you share a little bit of how fast the economy, got better and everything got rebuilt in that process? And while you were living in Hungary during those 14 years, and which opportunities you found and took advantage of?
Yeah. So I guess, a lot of things from scratch, right? So when I was there, when I got there, there were no malls, and they went from like 0 to 30 malls in the country, for example. A lot of logistics had to be built up, and the first Adidas store arrived, and there were lines around the block. The first McDonald's arrived, there were lines around the block. And so you can imagine, like, kind of a lot of mostly basic industry had to be built up, and they also they did well with like automobiles. They had like engine factory, things like that in Hungary eventually from the Western automakers. So that's what it was like. And in that context, I mean, I tried lots of things. I got into some real estate. I was just learning, right? I was young, I was learning, and eventually made a shift over some of the years there. There were a lot of really cool entrepreneurs there as well. It was just a good time to be there. Some Americans and foreigners from Germany are all over. So it was a very, rich community, and you could find co-founders. You could not a huge amount of venture capital, but you could raise some venture capital. And so there was one company where, after some years, I went from more basic to my first tech experience, and we were doing basically a telecom company using, software and new technology. Think about like a Skype or a Vonage. And so I had two co-founders, my friend who was CEO, and then my other friend who was CTO, and I was more marketing. And we spent a couple of years on that business. We raised a couple of million. We ended up exiting. It was not a huge exit, but it was my first experience with venture and tech. And I was like sold. I was like, this is good. We'll do more of this in the future.
This is what I like to do.
Yes.
Interesting. How complicated or simple was the part of raising capital? Because one of the interesting things when you contrast, you see big difference is how easy it is to raise capital if you're a U.S. entrepreneur raising capital for a U.S. startup compared to the experience of a Latin American entrepreneur building a company and raising capital. So you are in a developing country, okay, that was being rebuilt. The industry was very early stage. Venture capital, probably, the asset class was not well known by wealthy individuals and investors. Why don't you share with us a little bit of that experience? Which strategies did you put in motion in order to achieve the success of actually raising capital for this first startup that you launched with the co-founders?
So I would say there were not a lot of VCs there, so not a very developed, ecosystem for venture capital. But we found one, and my sort of experience in that time was we found this company that was a good fit, and my CEO was negotiating with them for months, every day for months, and it was a really tough process. But it was not like we had a list of 1,000 VCs that were a fit, and we were, on 7 calls a day with different companies, which is more, like a process you might see here in New York. So it was because of the small number of VCs, it was working through a process with the firm that we thought we could work with. And so that's what it was like. And just fast forwarding just a little to today, like it's still difficult in Hungary. I've invested in, over 60 companies so far. One of them is Hungarian led, but they're in London. And so what I've kind of come to realize is there are certain markets that are pretty deep, and that's where the ecosystems thrive. And it's harder in other markets.
And which strategies do you think were successful besides being very persistent and keeping frequent contacts with these potential investors? What made the investor make the decision of actually writing the check and giving you the capital that you needed to scale your business? What made it happen?
Yeah. I mean, I think, which is the same as I would say, like now, I think it boils down to a good team. And then, is it the right team for that idea? Are they able to educate the investor on what's going on around them, the competitors, the situation? Are they being realistic? Do they have experience? Are they going to stick with it? As an early stage investor, that's what I look at now. I look at the team for the most part. Those investors were not able, we were pre-product. They were not able to look at financials yet. So I think they got comfortable with the team and the strategy for the most part.
Excellent. And how long did you actually manage as a co-founder that business, and how long did it take for the business to scale and have the metrics and reach the maturity necessary to be considered as a target and acquired by a third party?
I mean, in our case, it was a couple of years, I'd say about 3 years. And we had a really, really talented team, right? We were attracting some good talent in a market, that didn't have a lot of opportunities like us, to join a really cool tech startup. And when we sold it to a British telecom company, and our technology was really good. So they basically were putting billions of minutes of telecom, and this is back in the day. I don't know how far it's evolved since then, but billions of minutes of telecom across our platform, which was like a new way of running the phone traffic.
Very interesting. Was that a decision that you made internally to sell, or was it, the company that actually knocked at your door and said, you're building a great company, your product is amazing, we want to integrate that product into our business because we have an open innovation strategy, and let's begin conversations because we want to acquire you. How did it work?
Yeah. I mean, to be honest, like our CEO found this acquisition opportunity at the same time. If there was a deeper venture market, we probably could have gone further. We could have raised successive rounds and made it even bigger. So I would say, yeah, an opportunity presented itself, and that was part of our learning. It was not an easy market to go all the way in. So I think about that now, being in New York, doing business in North America, also a big chunk of our portfolio is in London, like I mentioned, that it's a solid market.
From an emotional point of view, Rajiv, how simple or complicated it is to sell your baby, your business?
Well,
How
honestly,
did that
after that,
conversation went on
yeah,
inside, between you guys? Because I bet
no,
some of the founder partners wanted to sell, some others probably not. How did that go?
well, that's an interesting question because that's when I realized in that experience, I realized, you know what? I'm going to be the investor. I'm going to be a capital allocator. I'm going to have lots of companies. I don't think of it as a baby. I think of it as like, where do I put my dollars? And if there's like another company over here, I can put more dollars in and it's going to be a winner. Let's do that. And I can have a bunch of companies. And so that was my first time realizing that. And I still did entrepreneurship after that. So if we talk about coming back to New York and what I did there, I didn't become an investor right away, but I realized that that was my path, I think.
Mm.
And
Yeah,
and like my co-founder did feel that way. Like it was his baby, and it was really. I understand what you're saying. It's
yeah,
just that I think the investor might have a different head, a little bit different experience.
absolutely. So you sold the business. Did you stay in Hungary for a while and then moved back to New York? And what made you make the decision to actually move back to New York?
Yeah, stayed a while, and it was around 2007 that we moved back to New York. It was the financial crisis was just beginning. Hungary actually also had America had a hard time. Hungary had a hard time also. Hungary had a bailout already at that point, financial bailout. And then I just thought for career I can do better in the U.S. now, being like that I'm from the U.S. and it's a deeper market. So made a decision to go back to the U.S. for career and found another opportunity and just they were like, can you start in 3 weeks? And I told my wife, honey, I got a really cool opportunity. Can you pack the house and the kids and meet me in New York?
Was that a simple conversation or a complicated conversation?
No,
Because sometimes
no.
there are two types of complicated conversations: the one that you have with your partners in your business, and the conversations that you have at home with your partner, which is your wife or husband.
Yes, yes. No, I think it came as a shock. And like we were saying all along, we might move to the States at some point, but after 14 years, it was, I don't know if she was expecting it at that moment.
That's good. So you landed in New York and found this great opportunity. Was it an opportunity to join the team of an existing company? Was it an opportunity to launch a new business here in the U.S.?
It was like an existing 100-person startup. And what's interesting is, I didn't even spend a year there. I spent less than a year there, but I am thankful for them for helping me get to the US. And I did my best for them for those 11 months. But then I found my way, soon after that, I found my way to another company that I was really excited about called Marketo and um, joined them pretty early. And that ended up being a really great opportunity because that company grew really fast. And for example, we went from 100 to 1,500 employees
Wow.
in like roughly like a 5-year period. And that was the company that I went public with. So we went public in 2013. And I remember two things about it. One is it was Silicon Valley based. So they actually wanted me to move out to California. So I had to live out there for a bit in the beginning, about 9 months, and then they let me go remote. So I was working remote. I just remember the talent was so great. Like being at that California company, when I showed up at those offices, everybody around me was so talented. And I was like, I got to up my game. Like, this is really cool. So that was my first experience with like a West Coast, a real West Coast startup, California style. And, the management team, to their credit, kept adjusting the business. When I joined, I think they were growing like 136%. They had raised something like 50 to 100 million. And they had one of the best products in the market for like this marketing automation, it was called. So basically a marketing platform for B2B, for B2B. And I remember thinking, wow, this is a great idea because no matter how you get your customers in the door in terms of advertising or sales, you need this B2B platform. So like every company needs this. So it's a real platform play, and it's going to keep growing, And so Yeah, so I had a great experience there, about 7 years. We went public, and what was interesting, after we went public, we were worth about 2 billion. Then we got bought by private equity for 2 billion. And so the whole thing went private again. It was all owned by private equity. Everybody got paid out in the company, and then all the ownership was with private equity after that. Maybe some top leaders as well. I don't really know. And so the whole thing changed a bit, and there were about 1,500 employees, and about 500 left in the first year of private equity, and then 500 new people came. So it was like a complete, it was a big change.
Yeah.
And then a couple of years later, so I left about a year after that. So I stayed for about a year of the private equity, but I'm more of a startup guy, right? So I was like, I enjoyed the beginning part, the early years. I enjoyed that a lot, and I was ready for
What
my
an
next.
interesting experience, Rajiv. How big was the payroll when you actually became a member or part of the Marketo team, and how much did it grow? You already mentioned it became a 1,500
Yeah,
employee company in the period of 7 years. How mature was the company when you
yeah.
arrived?
I mean, it was less than 100 employees, and it was like everybody knew everybody, right? So you could walk in the office of the CEO or the CMO. I was on the enterprise consulting team, by the way, more consulting in my, and I worked with over 100 clients. So like they would sell their software to Microsoft, and I would fly out to Microsoft and help them, figure out their strategy. Or they would sign mid-sized companies, or I worked with Pfizer. I worked with some big ones, but I worked with smaller ones as well. Um, so a side note, I really enjoyed the consulting work because it was like solving puzzles as well. So it kind of relates to what I do now, even.
Mhm.
But so it was less than 100, and what I also remember was that like it was going well, so they kept adding people, and there was like always opportunities for new roles or new hires. There was no one leaving. I mean, it was just like they needed so much help at all times, and there would be a meeting, like let's say 6 months later, and they'd say raise your hand if you're new, and it would be like all the hands would go up,
Yeah.
and that's just what we lived in.
That,
um, and everybody was excited about a couple things. They were excited about like beating our top competitor. That was one of the things, we want to beat this company. And then the other thing they were excited about is we're going to go public. And so there are always these like, moments, things we were excited about together. Like we're all in this together. We're all trying to make it work. It was less um, structures. It was more like hiring good people really fast and trust them to like do the right thing. And then eventually it got very structured after the IPO and stuff. Things got very structured.
yeah. It's interesting what you're mentioning, and normally it's a big challenge, which is, how to hire properly when you're scaling a company that fast, because, you know,
Yeah,
you need to take in consideration many things. You need to, hire skilled people. You need to hire people that culturally fit with the culture of the company, and people who are passionate about the product or service that you're offering to the public. You need the three things, and finding those individuals or candidates, it's not simple. So can you share with us which strategies the company implemented to grow a payroll of 100
yeah,
employees to 1,500 employees in a period of 7 years? What did they did well and what they didn't do well, and which learning uh, or tips that you actually took note of when
yeah,
would be useful when you're advising a founder of your portfolio of startups or a part of
yeah.
your current VC fund, or you're actually mentoring successful entrepreneur who is scaling successfully a business.
Yeah. Um, I mean, a couple thoughts come to mind because I think, clearly they had to hire the top leadership kind of defines what's going on. So they had to hire these really important leaders, and it's hard to go back and think about a lot of the details around like that hiring back then, but Even now I see it with startups. It's like you hit a certain amount of revenue, then get some key leaders in place. They can then, grow that part of the business. I'd say that's a big part of it. And it's tough. I don't know, even now currently, adding to my team and being a leader at my fund, I think about it a lot. Like people do need to get along. There's a lot of it is that. And so you need talented people. And so it's a lot of trial and error sometimes, and just being transparent. So we have a policy at our fund where, it's transparency in terms of compensation and what people are doing, so that I can get the feedback all around me and just listen. And I think that to me would be the number one thing. So at any company, it would be like, okay, I have all these leaders. How's everyone around everyone feeling about it? And do I need to make adjustments?
Interesting, very interesting. And thank you for sharing those power tips. The mindset of a co-founder that is scaling a startup is one thing, and the mindset of the managers of a private equity firm that acquires a startup that went public is completely different.
Yeah.
How did that process go internally when the private equity firm decided to buy the shares of a public company that started its life as a tech startup focused in the marketing industry?
Yeah. So you're asking like what did they do, or what
How complicated was the alignment of interest and the actual culture of running a business? Because entrepreneurs manage companies that are scaling and growing fast. Private equity, private equities are managing companies that have a great cash flow, and they need to restructure some things in order to make that cash grow, so they can actually sell that business to a third party eventually in the future. So the strategies are completely different.
Yeah. So I think one of my takeaways was, they had a playbook. They definitely had a playbook. They definitely brought in some of their own leaders. Okay. And then what I kind of noticed from the playbook was certain functions were taken down. Like, for example, the consulting function, which if you think about a startup like that, like the consulting function is something, it's kind of an investment in your future, because you're gonna help your customers onboard. You're going to keep them around because they're happy. They might expand, they might grow they might upsell. But consulting itself doesn't tend to be a high margin business. So whereas a B2B SaaS business is maybe like 70-90% margins on software, the consulting business could be like razor thin or negative. And so you're carrying this huge, business for a purpose, but it's not on its own making a lot of money. And so I saw like that might be something a private equity buyer might want to take down and maybe outsource to third party, for example, versus I think engineering and sales are two areas I noticed that they wanted to take up, which kind of also makes some sense, like especially the sales. So I don't know. I don't know what their time frame was. They ended up selling the company to Adobe for like $4.5 billion a couple of years later. So I think that I don't know. I don't work in private equity. I don't claim to know private equity. So like, what is their time frame and what is their net effect on that company? I don't really know that answer. But those are a couple things I saw.
Very interesting. So when the company was bought by the private equity firm, you mentioned that you continued to work with the company for about 2 years, and then you left. And when you decided to leave the company, what did you do?
Yeah, so I left the company, and that by this time, kind of, I gave you that hint before. I knew I wanted to be the investor. So I basically had the opportunity to invest on my own, and I started investing in high growth public companies at first. And I was doing these trades where I was looking for companies that I believed had a long growth runway. So examples of companies I picked at that time, these are public companies, right? So I picked Tesla, Workday, Tableau are three companies I remember. And if you think about it, like two of those are software. One of them is clearly B2B SaaS, like similar to what I was working in. So I was kind of thinking about areas I understand. Tesla, I could understand. It's a car, but like could see that it was different and special than the rest of the industry. And there are moments where those companies in the early years like didn't really, people didn't really think about them very much, or the stock prices were really low and there was concern. And so I would like look for those moments, think, okay, this is going to keep, like Tesla, I was thinking 50% a year growth is what they were doing year after year at that time by adding new factories, adding new models. Um, and I felt there was just, I don't know how long, but it's going to go on for a while, and I can safely get into a stock like that. Except for when they launched the Model 3 and it was really scary. So I wasn't in at that moment. I was scared they would actually run out of money before the cars started coming out. So like I
Well,
would go,
they almost did.
yeah. So I would go into the trade and then I would hold it for a few months, and it would kind of maybe snap back to like a normal level. And I would look at valuation, I would look at growth. Like Tesla at that time had like a price to sales of like 5, very low. In later years, when it got popular, the price to sales was like 10, 15. So basically you would be paying, if it was 15 and still growing 50% a year, I was thinking Moneyball approach. Like you're paying 3 times more for the same growth,
Claro.
right? Very simple. I mean, and a lot of those companies, they're still in a growth phase. So that's why I would look at price to sales instead of like earnings. I figured the earnings, they were growing into a future earnings, right? So I was thinking of it that way. So basically, great company, down at the moment, probably will normalize the price at some point. Let's hold it for some months. And then I would just close the trade. And it ended up going very well for, I'd say I did it for 3, 4 years. It went very well. Generated like respectable returns. Like I'd say in the neighborhood of 30% a year returns. And was using money that my money, family money, which is, I'm just mentioning that because then when I eventually got to angel investing and creating a fund, my family around me supported me with that and like invested in the fund. So kind of this stock time period of doing well helped me generate some money to do angel investing and create a first fund, and then also some support around me from family and friends.
Yeah, that's very interesting, and I would love to drill down on that experience, Rajiv, because as you're aware, the venture industry in Latam is not as mature as it is here in the US. And the interesting thing is that Latam is offering great opportunities for both entrepreneurs and investors. And some of them are becoming experts, beginning the journey as angel investors like you did. Why don't you share your experience? How did that evolve? When did you make the decision of actually stopping making trades on the public market and start focusing on making direct investments in startups as an angel investor? And at what point you realized there was a better idea to actually set up a fund in your friend investors and start investing in a couple of startups in order to create a portfolio and diversify the risk?
Yeah. So you're gonna laugh about this, Nacho. So I was doing public, trading, and then I was on this website called Seed Invest, and it had all these companies that you can invest in, like on the website. And I found this one that looked really cool, and I clicked on it and I read up and I researched it, and I was like, this is fantastic. And I clicked invest on a website. That's how I got started. That was my first investment. I mean, that started a whole process. But
what was the name of the website?
It's called Seed Invest. Seed Invest.
No,
There
so
are others, right? It's not the only one. There are others. And in fact, that's not really how we do it now, but that's how I got started.
So if I understand correctly, Seed Invest is like a marketplace where startups promote themselves. They have like a one pager, and you as an
Yeah.
investor have the opportunity to learn about the startup, read about the startup, and then eventually decide whether you want to invest a small ticket or a bigger ticket.
Yeah, for sure. And there are other platforms. I mean, what I realized, now what I mean by we do it differently is as an established venture fund, you are now getting deals from friends, founders, other VCs, members of your community that are very skilled, and you're getting really high quality deals. So that's the difference. But I had to start somewhere, and actually, so I made that investment, and then I started looking around. That was like a real estate technology investment, which I could understand real estate because my family had real estate.
Right.
And so I started down that path. I drove around the country and knocked on factory doors to see what all the competitors were doing in terms of different ways of high tech buildings. I thought that was so cool. And I made a couple of investments, like out of maybe, running around and looking at 30 to 50 companies, I found maybe three that I thought could be winners. And I made three investments like that. And then I started, um, so that's interesting because I started with that sector and that approach. And then in 2019, I made a woman-led investment. After about 10 investments, so I probably made like 10 investments in guys first. Made a woman-led investment summer of 2019. I remember it so clearly. And then I said, we're going to focus on that. We're going to focus on women-led companies. And then that changed my whole approach. Like, then I started looking for where are the best women leaders, and I would go to events. Like, just as an example, I went to the MIT FinTech event, right? There were like 100 people on stage, two women on stage. I went and talked to them, and they were great.
Mm-hmm.
And so, like, kind of like that, I was just trying to find the best women, whether I was finding them through connections, through LinkedIn, through events. And I ended up starting to build my portfolio that way. And again, sticking with areas I knew, like I knew B2B SaaS, but I was also interested in health and wellness and women led. So I ended up with a lot of B2B SaaS that was like future of work instead of marketing, right? Where I came from marketing, but it was more an area that interested me and how I thought we could make the planet a little better. Because if you think about a future of work, I have one that I invested in that's like wellness for employees, right? And it's like it's high tech wellness for employees, and this could be huge, right? This could make a lot of people feel better. So I definitely gravitate towards things like that. But I ended up investing in, I chose volumes. A couple decisions I made was about a third of my money is this first fund. We ended up raising money from others. So we started inviting people in after I felt this is going well, and I feel very comfortable bringing in others. And I decided to do volume because I saw data on venture capital where 50 plus holdings is much safer. Because if you think about pre-seed and seed, like very early stage, the risk magnifies. So you kind of need that volume. So like, I was trying to take a portfolio approach, like how do I build a safe, solid portfolio? Which, by the way, that volume thing has been pretty confirmed. Like not saying that I want to do this tomorrow, but I talked to a top tier fund. They do 150 holdings per fund. They do 2.5x per fund. So it's very smooth at that level, right? Which
Yeah.
makes sense. But like most funds are kind of like 20 holdings, 18, 25, 30 maybe. So it's an interesting discussion of like what's the right number, right?
Yeah, I'm going to drill down on something that it's, I think, a little bit complicated, and your experience is going to be very interesting. Interacting with LATAM entrepreneurs who have gone through an exit and they have sold their business for millions of dollars, most of them, they eventually become or decide to launch a new business, but in the process, they end up also becoming sophisticated angel investors. And they start investing in startups in their home country initially and eventually in the region. So there are a number of LATAM entrepreneurs that are angel investors that have made 20 plus direct investments in different startups. And some of these entrepreneurs, like you did, eventually decide not to launch a new business, but instead become fund managers.
Yeah.
And one of the conversations as a trusted advisor of successful entrepreneurs that I have had in the past is how to deal with those direct investments made by the entrepreneur when they decide to set up the fund. Okay, do they leave those direct investments where they are, or do they transfer the interest that they have in these startups to the fund and cash out, and have they include these startups that they have invested in the past to the portfolio of the fund, to which they add new startups of when they decide to make new investments? How did you deal with that situation in your personal case?
Yeah, in my personal case, I made a bunch of investments as an angel, and then I realized I wanted to create a fund. And so what I did was I moved the ownership of all those holdings into a company. And I said, okay, this is the value, this is where we are. So who wants to join me? This is the value of the fund right now. And we started bringing people in one by one. That's how that's normally not how you do a VC fund. So even our second fund is not like that. We're doing it the standard way, but that's how I was able to kind of, that worked well. That worked well because that gave me a base, and it gave my investors, it allowed me to expand my portfolio with these investors. It allowed them to come into a safe situation where we already had 10 to 20 holdings. And it allowed them to see, like, these are the holdings, it's not a blind pool situation. It's like, these are the holdings, they're here, you can look at them, you can touch them. So I feel like that worked well. I don't think many people do it. Like, in terms of the number of holdings I pushed into the fund, I don't think that's very many people do that. But it did work. I feel like it worked well. So, like, this is evolving, by the way. So I think I want to point out that, like, there's a certain way that I did fund one, and I was like the GP. I usually had somebody there next to me, so I wouldn't say that I was alone. But now, our fund two is like 5 of us, and we just did a deal out of our third deal out of fund two, and it was like 4 of us looking at it, right? So this incredible deal team. And if you rewind a year ago, I hired my associate, Alex. You've met her. She's incredible. But the reason I'm saying this story is because, like, I was supporting my founders in fund one a certain way. I was like doing my best. It was like, how can I give them a lot of value with a light touch? Because I have a lot of holdings and I have pretty much, me, maybe one other person. And so what we did at that time was, really quick check-ins, and then quickly send them some value after the check-in, whether that's they want help with the pitch, they want some referrals to strategic introductions, really trying to be mindful that each one of those things we do is like really high value, so we don't waste anyone's time. And then peer-to-peer support, because, like, having 7 women founders in New York City, and I can have them out to dinner and they're all incredible and they can help each other. Or I have a woman in a certain industry, and one is in LA and one is in Denver, and I can bring them together, and they're so happy to find each other because there aren't many women in that industry, and then they become friends and, like, have a call every week for the ongoing. So some of it was that peer-to-peer that I think, and having the critical mass of enough women founders that allowed us to do that. But now it's changing now. So the minute Alex joined me, she, came in and started providing value to a bunch of our founders, right? From fund one, fund two. And so now I have that. And I think looking forward, it's going to change even more. We're going to be able to, we have better and more venture capitalists we're working together with that we can bring to our founders. And I have this sort of vision that it's not the end of the story. Like, the thing is, like, maybe how can we take a woman-led company all the way through all their stages? or maybe how we can take a women-led company in the UK and give them a path to the US and plug them into the US so they can grow in the biggest market in the world. Things like that. I think we can add to our fund model and improve it, which is what we're going to need to do as we get bigger, right? We're going to need to just get better and better. And I'm also going to lean into my team, right? All these incredible people as they join me. So for example, Melissa joining as my new partner, 9 exits under her belt, really good at engineering exits. That's another skill we can bring our founders. You know, some of them have not experienced that yet.
And it's not only important for the founder, Rajiv, it's also very important for the LPs because they want to hear great exits and success stories because they want to get money back plus the returns that you promised to give them when you invited them to invest in your portfolio of startups or your VC fund.
Yeah, so that's how I think our value will evolve, and it's a very competitive market. We're going to have to evolve it, and my feeling is by bringing on the best team I can bring on, this is how we're going to do it.
Okay, for the Latin entrepreneurs who are females and they're building great companies, why don't you explain with detail, Rajiv, which is the investment thesis of your fund so they can actually identify a New York-based VC fund that is focused on female-run startups that are scaling and looking for investors, VC investors.
Yeah. So our thesis for Fund 2 is to invest in areas where women dominate spend or decision making. So you can pretty much imagine what these areas are. Things like health and wellness, also future of work, and consumer. My new partner, she's consumer. So I didn't do a lot of consumer, but now I have that capability. So I'd say these are 3 top areas, and a little bit of education as well. Like I just personally love education because especially if it's for the youth, anything we can do in that area is going to just have a multiplier effect on society. So like it's a small slice, but I feel strongly about it. So those are the kind of sectors where, again, pre-seed, seed, opportunistic A, technology across those sectors, and 100 to 500K checks out of Fund 2. I think that's it. We have a certain footprint. So right now our footprint is North America, and the reason almost a quarter to a third of our portfolio in Fund 1 is UK, like almost 20 founders in the UK. That's because I go to Europe every year. I have a Hungarian wife, and I just had an opportunity to meet some incredible founders there. So we're open to new areas. The footprint is something as even a team of 5 right now, like managing North America and the UK is fine. We could go to South America. It's no rush. We want to go. It's just like managing, all the great opportunities we already have, our team, and then expanding into these new areas organically. We want to do that. So that's one of the reasons I'm excited to know you and to be able to explore that.
Yeah. Same here, Rajiv. No, and the fact that you're supporting female entrepreneurs, I think it's amazing and very unique. There are not that many VC funds are focused on supporting female entrepreneurs. At least you're the first one that I have had the opportunity to meet, and that's why
Thank you.
I'm so, happy that we met and we've been interacting together, and you're today sharing your experience and pitching or reverse pitching your fund, the audience of this podcast.
You just reminded me of something. Is it okay if I cut in?
Absolutely.
Because what I realize is that I should have said this probably earlier. We have a very we believe the solution to solving, because like, what are we trying to solve here, right? 2% of VC funding goes to women-led companies, but also on the globally on the VC partner side, it's about 90% of partners are men. And so realizing that the solution to this sort of misallocation is nuanced. It's not as simple as like just investing in women. It's like how it requires an ecosystem approach. So I kind of wanted to mention that. So what does that mean? Like for us, what it means is, number one, yeah, we are deploying capital into women-led companies. But number two, all these women have been coming to us for the last few years, and like there's three categories I'm going to mention. One is like women in college. They're like maybe interested in VC. So we take those women and we say, join our college apprentice program. We can do an event at your university. You'll get our newsletter. You can meet other founders and women VCs, get some role models and get some excitement. And maybe this is the path for you. Oh, and then there's women that are out early in their career. Maybe they worked 3 years at Wall Street, for example. And then it's possible they didn't love what they were doing and they're looking around, like what else is there in finance, for example. And then we take them and we say, look, you're so talented. You went to, you learned all this stuff, and maybe you should take a look at VC instead of going somewhere else to some other industry or something. Take a look at VC. You can pivot into a fund or into our ecosystem. It's worth a look. And then the third category is women at other funds, which is a little bit, it's interesting, right? They're at these other funds. We started meeting them one by one because of the nature of what we were doing. And, I realized like they need help. Like maybe they're a principal at a fund and there's like 5 established GPs that may not be women. And so it's like, how do I get understood by my leadership? How do I get promoted? How do I get a deal over the line that I think makes sense? But all these challenges, right? And how do I get on a board? Because maybe the board seats are reserved for the partners. So we put a lot of energy into, like, we call it like the path to VC. In that path to VC, all the way up from college through into partner at a fund. And we have partners now that were with us in these programs and have gotten promoted. They're a partner. One of them is my friend in London. She's at a $400 million fund. And what we realized is that we're trying to help them, but also they're part of our beautiful ecosystem and they can help each other. And they help us. I have one example I would say is there's a woman who went through our program. We grabbed her in month 3. She was at a late stage fund, but she was nervous about how to succeed in the job. We became friends. We have supported her. Now it's like a year or 2 later, and she's basically prospering at that fund. They do like secondaries and 30 million late stage checks. And she said, hey, I can bring you a really desirable late stage deal for your LPs. And I was like, perfect. That's not going to be our fund investment, but we could do a side investment and invite our LPs to this as an extra benefit. So we're getting support from people. We really were just trying to help them, but we're realizing it's actually good for us too.
That's a great strategic partnership, because you're offering your LPs like an option to give liquidity to the asset class, to their investment, which is amazing. One of the things that I want to do is build more relationships with VC funds from New York that are active player in the secondary market and connect them with LATAM VC fund managers, because one of the problems that we're having in LATAM with family offices that have made the decision to invest in the asset class is that there are very few exits, and not giving the investor the returns that they promised. So we need to fix or add liquidity to the asset class, and building relationships with New York VC funds are active players in the secondary market is very important, because it will give LATAM VC fund managers access to give liquidity to the investment.
Yeah, that's awesome. We can work on that together, because I have this one sophisticated investor, and he likes to say that most funds talk about like acquiring and diligence, but 1/3 of the job is the exit, and they don't talk about that as much. And I feel strongly about that. All the ways to exit and getting deep and understanding and embedded in those ways is a huge important thing. We can work on that together. I'm happy to introduce you to this friend of mine, of course. And she's like, I will go to bat for you because you helped me in my career. That's the beautiful thing,
That's interesting. You're building a network, and that network is composed of entrepreneurs, the members of your team who are helping you manage these VC fund, the LPs that have invested in your fund, and this amazing network of females are part of the industry that interact with you and your team. Okay. How do you communicate among each others using technology, and what type of in-person events do you organize, and how frequently you organize this event to give them the opportunity to meet in person or virtually, build trust, and begin to interact and share knowledge and learn?
Yeah, I would say a couple of things we do. We do work hard on it, and even Alex on my team, for example, my associate, like she has that in her DNA, right? This community building aspect. So, for example, I'll just give you an example. Uh, Alex joined me a year ago. She reached out to my portfolio companies within the first few weeks and had calls with as many as she could. Gets on a call with one of my founders who's doing a Series A, and then Alex says, okay, I can, and Alex makes 20 introductions for that founder to appropriate VCs. But so I'm just trying to explain, like, it's in our DNA as far as like not just me. But number two, we've got these couple categories, right? So we communicate kind of with our LPs, our founders, our VC friends, and then our what we call our apprentices and fellows. So we kind of have four communication streams that's like, yeah, we're emailing them, we're inviting them to events, we're engaging with them however we can on a one to whatever, not that many, but one to many. But also they're all invited, one to one to text us. They're our friends. And when they need help, they raise their hand and we help at that moment. So we're not like always, it's just like hundreds of people. So we're not engaging with them all the time. But when they need it, we step in. And then we encourage them to visit us in New York. A lot of people come through New York eventually. So I get texts almost every week, like, hey, I'm in New York next week. And then that's awesome. I'm like, come in the office, meet the others. We have new team members, plug into Alex, plug into Brianna, and then my team can help them too, right? So I want everyone to be plugged in so that, and even this goes down to the college level, like, if there was a girl who spent time with us this summer, sort of like an intern, and we plugged her into 10, 20 people this summer, and that's it. She can't escape in a good way. Like she's in the Chai family, so she'll always have good people to turn to for support. Sorry, yeah, and I forgot where you started me off, but does that answer it?
Yes, absolutely. I'm going to ask you a question that relates more to investors. Why don't you explain to the investor side of the audience of this podcast, what type of investors are you looking for, and how big is the ticket if they decide to invest, or small is the ticket if they decide to invest in your fund?
Yeah, awesome. So we have a multi kind of strategy. I spent a lot of time thinking about like the evolution of our investors, So like in Fund One, it was a lot of high net worth investors. We did get some very special people. Already even in Fund One, we had someone who was early at Uber. He built like Uber Eat, Uber Freight, like several products at Uber. He was the first engineering leader that took him from like 0 to 50 people, and Travis kept putting him on each product. We have the co-founder of Capital One Bank also invested in us and is our friend and advisor. So I would say the three things that are important for us going forward is one, people like that, like people who are operators and can help our founders. These operators help our founders to succeed. So that's one. We have room for more of those. Also, I feel very aligned with family office world. So this is my DNA. Like this is family, this is relationship, this is trust. It's also more relaxed. I'm like that. So I've spent, the last 14 months getting to know family office, kind of the universe better. I've recently been invited to be a member of DC Finance, so I'm now a member of DC Finance. So I will attend like as many of their events as I can. And we've gotten to know a lot of organizers, not just DC Finance, but a lot of organizers that we're friends with. And so through I believe that like that's our sweet spot for now. These families, and you know, one of my friends has a like almost $500 million fund, and it's all family money, family office money. So I truly believe this is the zone we're going to be in for a little while. And I appreciate, you know, meeting these families and working with them and figuring out how to work with them even better, because you know, the reason we started offering late stage incredible SPV opportunities is because of the power of our network, but also because family offices want that. So just like listening to that, like what do they want, what are they interested in, and being patient. Some of them are not in VC. I think we'd be a good partner to help navigate all that, because again, we just believe in the relationships and this, and just like being helpful. But eventually the third, you know, piece of our strategy is to start the conversations with institutions. There could be certain institutions that have mandates for emerging managers or to solve gender a bit. So we're obviously having those conversations and open to that as well. I think college endowments will be interesting for us because we're able to go to a university, invite all the young women at the university and say, look at this, and light up the university and give those women a great opportunity. And then we're aligned with maybe what, you know, what the endowment might be looking at that university. So I feel like there could be some interesting paths for us in institutions eventually, but we're just having initial conversations at this point. It's pretty early in that.
Interesting. Well, to finish this conversation, Rajiv, I would love you to share a power tip for an entrepreneur who is dealing with the challenge of raising capital for his startup.
Yeah.
A power tip for potential future VC fund managers that is considering, you know, launching a VC fund after gaining some experience as a sophisticated angel investor, and a power tip for a family office that is considering for the first time investing in the asset class, either directly investing in a startup or a VC fund, and what's the best strategy to get engaged in the industry?
Yeah. Okay. So starting with the startup, I would say, you know, the investor is looking for, eventually it's a numbers game, right? So they're looking for, like, you hit 1 million revenue, maybe the high margin multiple's 10, it's worth 10 million. They're looking at how do I get that, and that, how do we get that company to 100 million or even bigger, 1 billion? So no matter what you're doing, in the end, it's that numbers game and the confidence around getting to those numbers. So when you raise money, if you can show them, you know, this is how many months, let's say 18 months later, this is how much we're raising, this is how it gets us to the milestones in very clear steps. That's going to just make your case so much easier. So, you know, just as a very simple example, like we're raising 1.5 million. Our product is just launching, and that will get us, we know how to, we have like 12 companies that want to be paying customers, and we can get those 12, we can get 8 of the 12 in 18 months to be paying us 300K each. You know, it's very clear. They already are saying they want to do it. And it's like a case, right? That case sounds pretty good. So that's how I'd say to the founder. And sorry, what was the second category? The
Our tip for the potential future VC fund manager.
Yeah. So for the VC fund manager, I would say think about, like, if you want to start a fund, think about, do you really want to start a fund from scratch, or do you want to maybe join another couple of people or a platform that's further along? Maybe they're already at a fund 2 or 3. And if you feel comfortable with that, maybe, and the example, I think about this for us too. The example I think about is, like, how do I make it easier for a woman partner to join me? And my answer to that is I'm already, 5 years along, right? And we have this momentum, and we have policies like our policy of fair equity. We will share the equity fairly if you join us. LP alignment, you will be happy with our LPs. They will be good people. And then fundraising support. We will help with fundraising. And I think with a lot of fund managers, some can raise, no problem. Others, it can be very tough. So that's what, like, my example is like trying to create a place where it makes it easier for that partner. And so that's what I'm saying to people starting funds. Like, you can go start from scratch for sure. But it's a journey, right? It's quite a journey. So even looking at like you know, some other funds out there I've seen, they started with like a fund one, fund two, fund three. Fund three still might be under 100 million. And that's like 7 years later or 10 years later, right?
Yeah.
So it's a journey. So just thinking about how early stage you really want to go. And then for the family office, I would say, I think family offices are pretty good about getting out there and looking around. So I would say, um, if you're new to getting into VC, right, if you can search around and find, you can go direct. Like, you can just start going direct. If you think you have that capability or you're close to that capability, you can go and start doing direct, tomorrow. But another approach could be finding funds to work with, and it could take time because even I've been experimenting with 5 years of who we're doing deals with, right? So it's like, okay, that one I tried in 2018, we're not really doing deals together anymore. But another one that I found in 2019, it's 2024, we love each other. We've got 3 deals together. We're in the trenches every week. So like finding the ones you're aligned with, and it's a lot of things. It's like the culture, the people, it's the thesis. There's a lot of thesis areas, geography. So just like finding your people, and you can definitely invest in the fund and invest next to the fund. I think that's just what a lot of families do. Um, but you're just trying to find the people that you can be in the trenches with for the long run, right? Makes it better.
Interesting. And what about the future, Rajiv, to finish this very interesting conversation that we had this morning? How do
Yeah.
you see the venture space and industry evolve in the US and globally? And how likely it will be for new investors to enter and start investing in the asset class?
Yeah. So, I mean, I think the evolution is interesting because obviously we want to see some changes just in terms of diversity. I think they'll slowly happen. Um, and it'll create more opportunities because the beauty of this is when you have these people sitting in the partner seat, they'll see opportunities that others are not seeing. So there's an opportunity, even though it's tough times right now. I think we're deploying half the money as we were like 2 years ago. Like, it's tough times right now. The valuations are very good. So I think now's the time to be investing for expected future returns. And I think the industry can be even better. It's already an awesome industry. I love it, but it can be even better. And there's just opportunity. I think there's opportunity for, always opportunity for startups that are doing the right thing. We're looking for, thousands of women to move up the ranks and join VC funds and go do their investing. And there'll be some change, right, in the industry because of all this, and we just want to be on the right side of it. If you think about top tier funds, right? So let's think about the scale of a top tier fund. They could be one deploying 20 billion a year, right? So sometimes it's important to think about that scale. So if you think about like a top tier fund and being, having an extra like 3 times more, 4 times more, 5 times more women partners, that would be a lot more investing, and there would be a lot more women's health. There would be a lot more impact on society.
Absolutely. I completely agree with you. Well, Rajiv, it was a pleasure to have you as my guest speaker today in the 48th episodes of the Startup Mentoring and Venturing podcast. Thank you very much as well for being generous with your experience. I think everything that you shared today, it will be very interesting knowledge, and that will be very useful for entrepreneurs, fund managers, and family offices of the region. And I'm super glad that you reserve a space in your complicated and busy agenda to spend this hour and a half having this amazing conversation with me. Thank you very much for your time and your experience.
Yeah. I just wanted to say thank you too, and I'm happy to engage with any of your listeners, even if we have to fly down to South America. That would be awesome. Love it down there. And thank you for creating a safe space for me and having me.
Thank you very much, Rajiv. Let's keep in touch, okay?
Yep.
Para nosotros fue un gusto producir y compartir el contenido del episodio de hoy. Es nuestra forma de aportar valor al ecosistema del emprendimiento y del venturing en las Américas. Si te pareció útil lo que aprendiste hoy, apóyanos recomendando este podcast a tus amigos emprendedores, mentores e inversionistas. Es la mejor forma de fortalecer nuestra comunidad. Recuerda, we are stronger together. Para escuchar episodios del pasado, para hacer cursos online gratis o con descuentos especiales, para implementar la estructura corporativa y fiscal ideal para tu startup, o para internacionalizar tu fondo de Venture Capital con servicios de formación y administración de fondos de calidad, visita nachoymary.com, marca mi agenda Zoom, and let's talk. Nos vemos el viernes que viene.